please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very few points away from that 10,800 odd mark, just 3 points away. The banking space, that's doing well. We were up 300 points, now we're up 360 points. Yes Bank, that's clearly the star today. That, in fact, in the last few minutes, that's moved up virtually to the high point of the day. But how do you trade the Nifty from here? Will we move higher, or do you think, in fact, we're getting into a bit of a resistance? Ashwani Gujral joins us, as well as Rajat Bose. Ashwani, coming across to you. Levels on the Nifty, trade on the Nifty?
See, the good news is that HDFC Bank is just about to move out of a very, very narrow range since morning. And that looks like that could carry the Bank Nifty another 100 to 150 points higher, because ICICI is firing, Axis is firing, Yes is firing. I think HDFC Bank looks like it's poised for about 25-30 point move. So that way, I think Nifty can also move higher. So possibly today's expiry on the Bank Nifty will be much higher from these levels. Overall, the market has not shown any sort of significant reaction or correction. So that way, today is a positive day and more short covering should be on the way. Having said all of this, individual stocks, Dewan Housing is a buy with a stop of 310, target of 325. Century Textile is a buy with a stop of 920, target of 955. And Vedanta is a buy with a stop of 250, target of 264.
Okay, Rajat, let's get your trading ideas as well and call on the index. Are you willing to trade long now? 2 days of some strength at least.
Well, Subi, I suppose day before yesterday on your sister channel towards the end, I suggested going long, and that time it was a pretty bad scenario. Well, with all over the world, new lows are being formed. But today, I suppose, is the second day, and this hot covering rally is leading towards maturity. Why do I say that? If you analyze the Nifty 500, as of now, as I'm talking to you, 301 stocks in that Nifty 500 is was trading above 1% from its previous close, and only 11 stocks are down by 1%. When such a situation happens, you know that actually the very next day, it could be even the second half may not be all that good, but still I would say that since the momentum is very much there, and so long as the Nifty maintains itself above 10,770, 10,760 range, there could be some more movement, and especially today is the Bank Nifty weekly expiry, so there would be some movement there where I expect the Bank Nifty to actually close between 26,600 and 26,700. Having said that, at the midday, I have chosen two stocks. India Bulls Housing, I would put a stop loss below 1198 and trade for 1216 and 1222 targets there. And Sun TV June futures, stop loss below 919 and targets would be 943 and 948. I suggest don't carry the position even if they are in futures, because I'm expecting tomorrow to be another down day again.
Tomorrow could be a down day. All right. Thanks so much, Ashwani, as well as Rajat, for joining in and giving us those trading strategies. By the way, we've hit the 10,800 mark. We kissed it, and in fact, now we're flirting with that level. So keep an eye out on that level. But I think very, very important, the 10,700 put. You know, if I can request my director to pull up the 10,700 put as well as the 10,800 put. Now, both of them have added nearly around 15 lakh shares between both of them. The 10,700 put, that's the most active today. That's the only strike that's added more than 10 lakh shares today. So keep an eye out on that one. That's indicating really, if you're writing that particular strike, just for a retail audience out there, you're assuming that the 10,600 to around 10,620 level will hold out. Pull up the 10,700 put. That's the one we're talking about. So the very fact that people are writing this, or if the smarter money is writing this, they are assuming that the bulls can defend the 10,600, 10,620 odd mark. It's heartening to note that in the last 1 hour, in an uptrending market, we are seeing addition at around the 10,800 put as well. So get that one up for you. The PCR has moved to around 1.47 odd. So pretty good looking screen, at least as of now. We've seen a good bounce from the recent lows. We're up more than 250 points from the lows that we saw just a couple of trading sessions ago. So good going as of now. Let's pull up the European markets. Let's see what cues we're getting in from there. The global market has been more or less steady, and that's helped our cause really. A couple of trading sessions we were underperforming, but you know, the global markets good going. The DAX as well as the CAC, both of them opening up with some gains. So this should be good going on a Thursday.
So far, so good. I guess the bulls can't really complain. Let's see if it retains. I think the crystal test is going to be if we can actually sustain an end today at these kind of levels. Then that means, okay, you've got 2 days back to back, and maybe some confidence returning. Yeah,
and I want to see what happens on a Friday afternoon as well. You know, because you're going to be going into a weekend, and some of those, you know, though we are saying there's a big bounce from the lows, etc., but some of those mid-cap and small-cap stocks, they will be under some pressure. You know, select stocks will be under pressure because you don't know whether you want to carry them into the weekend, whether it will come in ASM, and you know, there'll be that mark-to-market as well for a lot of these stocks. You know, a lot of the parallel trading that goes on a Friday afternoon. So we'll have to keep in mind tomorrow's afternoon trading session could be quite volatile for select stocks. The headline index, yes, it's looking good at around the 10,800 mark.
Okay, so well, on that note, let's take a quick break. On the other side, we will get you a special conversation with Sanjay Shah of Morgan Stanley. Welcome back here with the halftime report. It's a steady day on the street so far. Let's now track an exclusive story that we're getting from our colleague Priya Sheth. India's central food regulator is all set to tighten the noose around the food business, or rather the food businesses. CNBC TV18 is learning from sources that the FSSAI is working on imposing stringent penalties and punishments to offenders. And this would require an amendment to the existing Food Safety and Standards Act of India. Priya is now with us to give us the details. Priya, this is interesting. What kind of amendments is this body thinking of?
Well, there are several amendments that the Food Safety and Standards Authority of India is proposing, especially to the penalty as well as the punishment structure. And this is applicable for food businesses as well as restaurants. Now, it proposes to make this entire structure more stringent for businesses, and this would mean revamping the entire penalty structure in the Food Safety and Standards Act. So an amendment of the Act would be required. Now, as far as the draft proposal is concerned, it seeks to enhance the penalty structure across several existing brackets, which would mean that the penalties imposed at present, for example, substandard and misbranded food, offenders face a penalty of about 3 to 5 lakh rupees at present, and this penalty is likely to be increased further so that we can minimize chances of adulteration. Secondly, businesses selling unsafe food at this point in time, if that unsafe food results in a death situation, it would cause the offender to get life imprisonment as well as a 10 lakh rupee fine. But of course, this is not applicable to those facing death-like situations. So therefore, the FSSAI seeks to further make this stringent and offer, offenders giving death-like situation about 10 years of imprisonment as well as fine. So this is a structure that the FSSAI has come out with, and it would require about 4 to 6 months before it's finalized and tabled as far as the Parliament is concerned.
Okay, all right. Thanks so much for that, Priya. Well, moving on to another CNBC TV18 exclusive. Sonia caught up with Sanjay Shah of Morgan Stanley from the sidelines of the Morgan Stanley Investor Summit and began by asking him, how does he view RBI's decision to hike rates this time round?
The Reserve Bank of India hiking rates, obviously it's against the background of corporate performance improving and the economy definitely showing some signs of a pickup. We also have the headwinds with stronger oil, with higher oil and a stronger dollar and with the Fed rates going up. So in some ways it comes quite naturally, though I think the market was evenly split between a hike or a no hike. It doesn't come as an entirely new or rather as a surprise. So that's one, and I don't think that by itself will have an impact on the equity markets per se. Separately on the equity markets, I think it's fair to say that after the strong run that we have had in the last few years, and obviously accelerated by the fact that the domestic flows had been strong, so also the overseas flows till at least the beginning of this year. With that as a background, I think we are going through a phase in the market where we need to consolidate and just wait out some time. So the longer term story for India remains really strong, but the near and now appears one should be a little bit cautious about it.
Well,
that's what I think.
Absolutely, because we've seen the flows taper off quite a bit since the start of the year, right? I mean, there's been outflows, especially in the debt market. Do you get a sense that foreign investor interest has waned, and is it just for the near term, or do you think the longer term story is intact as far as FPI flows are concerned?
So look, if you think about it and take the right perspective, over the last 4 years, we've seen almost $75 billion of overseas money coming into India between equity and debt. Year to date, we've seen slightly over $4.5 billion of outflow. Year to date in emerging markets, equities have seen about $52 billion of inflows, but India has really not got much. So fair to say, and in some ways justifiably so, that the relative attraction of India as compared to other emerging markets in the short term has waned a little bit. Again, it doesn't take anything away from the long-term story, because there's been fabulous work done by the government and the economic growth is just picking up. But yes, there is some short-term, rather a period in which India has to go through some kind of a consolidation, and that's why we're not seeing more inflows come through.
But do you see more debt outflows purely because of, you know, the rupee depreciation, higher interest rates, higher crude, etc.?
Yes, there could be some more debt outflows, but our view now is that in the near term, the dollar has peaked out.
Okay.
And if that be the case, with oil prices also stabilizing, we could see some cushion out there. So I think we may not see more inflows, and it's not just for India, for the debt markets, it's for almost all the emerging markets, but it won't be a complete exodus, because most of the debt investors in India have put in money only over the last 2 to 3 years, and the longer term framework that they have is that over a period of time, given the fact that the macroeconomic balance sheet has been repaired by the government of India and very solidly at that, inflation over a period of time and real rates over a period of time will, or rather nominal rates over a period of time will continue to come down. So I think again there is a pause, some retracement, but definitely not an exodus.
All right. Well, that's the word in from Morgan Stanley. We'll take a break on that note. On the other side, we'll have market expert Ram Pitre joining in with some commodity.
And finally, the monsoon rains can be seen all over Mumbai, Maharashtra, actually. And to talk more about that, we are now joined by Dr. D.S. Pai from IMD. Dr. Pai, finally, you know, Mumbai is getting its share of rains. The monsoon has hit nearly 3 days before time here. But, you know, there are a lot of concerns, really. You have been putting it out. The private forecasters have been putting it out as well on how it really can be very heavy rains between 7th to 11th June in Mumbai, Maharashtra, etc. What more can you really tell us about, and what concerns really are there?
See, as of now, monsoon has progressed up to Konkan and Goa in the west coast, and also because of moisture and in a favorable condition, it is getting rain. But still, monsoon winds are yet to fully establish over Mumbai and all. So, which we are expecting next 24 to 48 hours over Mumbai, and with a formation of low pressure system in the Bay of Bengal by tomorrow evening or early 9, there will be further increase in the rainfall activity. So we are expecting by 11th and all for entire Maharashtra. So before that, Mumbai will have a good heavy rainfall activity. Some parts of Orissa, Madhya Pradesh, entire Maharashtra, and even up to West Bengal, some parts of West Bengal, and entire northeast will be covered by monsoon. And during this period, from 9th to 11th, we also will have a heavy to very heavy rainfall all along the west coast, and even tomorrow also. And isolated extreme heavy rainfall is expected in this.
Sure. So just coming back to Maharashtra yet again, and there have been some reports out, and I really would want your word on that. Is it going to be as bad as what Maharashtra witnessed or Mumbai witnessed in 2005? Because there are the kind of situation or the kind of the depression area that seems to be forming around here is being referred to 2005 in some sense.
Yeah, in some isolated parts we can get very heavy rainfall activity can be happen. But in 2005, you can see that happened in month of July. So already there was a lot of rainfall activity already happened, and soil were already wet. But this is in the beginning. So its impact may not be as much as in July, but you will have an amount of rainfall. In some parts you may get in terms of amount of rainfall that can happen.
Sure. Sir, also, I mean, you did mention on how the progress has been. Is it as per what IMD was, forecasting? And how, what is the progress coming in for the other states like Gujarat and central India and north? Is it all on time, really?
Yeah, it is a bit early than normal. And we are expecting by 11th, southern parts of Gujarat and southern parts of Madhya Pradesh, some parts of Chhattisgarh, Orissa, West Bengal, Sikkim, and etc. also should have a monsoon progress over this region. So we are on time, and most up to central India, there will be progress up to 15th of June, and thereafter there can be slight decrease in the rainfall.
So also, as per the data that we can see on IMD website, it says that between 1 to 6th of June, the monsoon until now has been 10% below normal. Clearly, these are early days, but with the kind of advent of monsoon, the kind of progress that you're talking about, that number, do you expect to ease off quite quickly?
Yeah. In 2 or 3 days, everything will vanish. In fact, we will reach in 40.
So also, what is the sense in the other states right now? Because the high temperatures that we still seem to be getting in from Rajasthan and other states, do you see any respite coming in there?
Yeah, definitely everywhere the temperature will get cooled. So the heat wave condition are no more there even in the West Rajasthan. So in at least the next 4 or 5 days, we are not expecting any heat wave condition. But still temperatures will be around 42, 43 will be still there. But as moisture is coming into more parts of northern parts because of easterly, there will be some cooling and some thunderstorm activity over northern parts also. So definitely there will be some respite from the...
Dr. Pai, I just want to come back to Mumbai again. What was the quantum of rain in 2005 and what are the estimates for the next 3 or 4 days, as you said?
If I remember, that was around 90s, I think, the value during 2005. So actually, wherever observatory is there, it's rainfall that occurs, you can get a measure. But still we are expecting, more than 20 centimeter, 25 centimeter.
Okay, not too bad. So, okay.
All right, Mr. Dr. Pai, we'll let you go at that. Thank you so much for joining us. So that clearly is the advisory coming in from IMD. The progress is good, and Maharashtra, of course, is going to have very heavy rainfalls, as he said. And Mumbai, yes, could be compared to 2005, but as he said, that happened in July, and these are still early days in June. So that, of course, is the news coming in from IMD. But let's also get in some commodity strategies now, and Ram Pitre joins in for that. Ram, hi. Well, of course, there is good news when it comes to monsoon. How are you looking at the metal space? Because that's yet another area which has been very excited and buzzing on the higher side.
Yes, Manisha, over the last few days, it is one-way rally. It is going on international as well as domestic market. Maybe in domestic market, maybe because of the rupee depreciation, the prices are going up. But to add to that, the weakness in dollar index has also supported the prices.
Any further gains that you see? Since we've already seen so much gains in metals, is there still a buy opportunity anywhere there?
Yeah, at the moment it is the trend is bullish, and trend looks like, especially specifically I can say about copper, anytime it might cross 500 levels.
What also is your sense really coming in for the crude oil prices? Because every dip has seen a buying opportunity come in here. We are back above $75 per barrel for the crude oil prices. How are you reading it on the charts?
No, WTI, if you see the 64.25, 67.25, this $3 range likely to remain for some more time. And either side break will give some sort of relief to around $60 level of international market. And then on a break of 67.25, you may see around 70, 71 again in WTI. But after seeing a low of 64.25 recently, slightly showing some sort of strength, but I think looks like...